Cash management for small business. This is Ken Boyd. So, a majority of new businesses fail, and the question is why? Well, there are a lot of reasons. Maybe the product isn't attractive enough to motivate people to buy. The business may also fail because owners can't manage growth well. But the biggest reason for failure may be financial and specifically a shortage of cash. And so, this is a discussion of some cash management strategies for small business. So, how do you start? Well, no business can succeed without a detailed business plan, which includes a plan to know how much cash is needed to operate. So if you don't have a plan, create one. So let's use the example that you design a durable rain jacket for hikers and mountain bikers. The production costs total $50 a jacket. Market research tells you that serious outdoor hikers and bikers are willing to pay $85 a jacket. You can find software to help you with all this analysis. So you gather research by giving dozens of jackets to consumers and get their feedback. They tell you that the jacket is more rainproof and it does solve a problem of being stuck on a trail soaked during a hard rain. Based on the total market for rain jackets and how you differentiate your product, you estimate sales to be 150,000 jackets in year one. Using all these assumptions on costs, revenue, and units sold, you can start to figure out the cash you need to operate. Now, the next step is to figure out where will that cash come from. So to produce 150,000 jackets in year one, you need the number of units, 150,000 times 50, the cost per unit, or 7.5 million. And the cash flow requires you to estimate monthly cash inflows and outflows. You have to have a monthly analysis. So product and service sales will generate a large portion of your cash inflows, but those receipts may not be enough to operate your business in the short term, say over the next 30 to 60 days. If you're waiting on customer payments and need more cash, you have a few options. The first one would be to open a line of credit, an LOC, for your company. You can do this by contacting your bank or another lender. And if you're a startup firm, a bank may offer you an LOC if you provide collateral, maybe it's assets in the business, etc. However, having an LOC is the good news. You've got money to fall back on. The bad news is you should use it as last resort because of the interest charges. So it's good and bad news. What about credit cards? When you speak to your bank, ask them about credit card options for your business. Some startup owners use credit cards. Some credit cards provide incentives. We all see advertised, such as cash back on purchases or hotel and travel points you could use to cover business costs. However, your first priority should be managing your business with the cash inflows and use the LOC or credit cards only as a last resort and make every effort to pay off the credit card balance every month. And last but not least, if you're looking to make sure your business is financially healthy in the long term, you should consider coming up with different sources of income so you have more than one. So for example, if you can manage cash flow for the rain jacket business and that becomes predictable, maybe you add other products like bike tire tubes for mountain bikes. Cash flow management gets easier if you have multiple products and services. So those are just some ideas for cash management. And you can find more content, blogs, and video